Hi everyone, this is for Cambridge International University Principles of Accounts 7110. Today's topic name is Sales Ledger Control Account. The main objective of this lesson to know and to remember how to write format. Okay, how the format made up. Okay, I'm not going to solve any past paper question or anything. Just I am going on explanation of the sales ledger control account. Fine. This is the format. The heading is sales ledger control account. You have to write control account and debit, credit. Okay. Then we'll discuss about credit sales and this part. Okay. In the first couple of minutes. Then we'll go for the further things. Now, if you observe the things, credit sales. Whenever credit sales taken place, I'm sorry, my handwriting is not that much good. I guess it's coming a little awkward. So if you are selling goods on credit, that means we are not receiving any amount. We receive the amount after some time. What we'll receive? We receive in terms of cash from the customers, or we may receive in terms of check, that is my bank. The next one, what are the other possibilities? Some customers, they may turn into bad debts. They say, I cannot pay the amounts. Got the point? And the checks which we received, the business received some checks, that checks been bounced. That means unpaid checks. The bank could not pay it. In that case, what happens? We'll get here dishonored checks. Please do remember these 4 points. Understand? Credit sales, whenever we have credit sales, we receive cash and bank after some time. Okay. Then if the customers turn into bad, that is our bad debts. That is a fundamental thing. Okay, right? Now we'll see one by one. Credit sales, yes, of course. For this sales, we received cash or check from the bank. If we are receiving before the promised date, we may allow some discount. Understand? If we receive amount before the promised date, we give some discount to the customers. That is discount allowed. Then the goods sold, maybe sometimes wrong goods must have packed, or sometimes the color may not be accepted by the customer. Maybe wrongly we must have sent some goods. So those goods customer will return to us. That is our sales returns or return inwards. Understand? So this sales ledger control account completely about the customers. Okay, trade receivables in simple words. To remember, wherever the credit sales are there, we receive the cash. Okay, if we are giving a discount, that is discount allowed. If the sales are not good, so there we get some goods to be returned. If some customers, they say that I cannot pay the amount, in that case we'll go for bad debts. Understand? What is the meaning of bad debts? It says that irrecoverable debts. The business is unable to collect their debts from the customers. Those turn into bad debts. Very good. We received a check from the customer. We put into the bank, but the bank did not clear the check due to insufficient funds. The checks are known as dishonored checks. The checks are known as dishonored checks. Got it? Then, if we have the refund to the trade receivables, if we receive more amount, okay, the goods sold for say 200 pounds, but we received say 280. The excess amount whatever we received, that amount will be refunded to the customers. So this is only the customer's story. Got the point? Yes. Now next one is a very interesting point is interest charge on overdue accounts. Okay, that I'll come back. Then set off. So that set off means what? We are writing 2 times. Okay, transfer to the purchase ledger. The customer may be our creditor sometimes. How it happens? For example, you take the bakery. So as a bakery person, he is buying all the raw materials from his stores, okay, and he manufactures the bakery bread, and he sells to the same store. So to the stores, the bakery person is the customer as well as the supplier. He is supplying the finished products. So they have to maintain sales as well as purchases. So what happens? Instead of paying and receiving amount, we go with balancing of amount. For example, I sold goods for say $100 and I manufactured all the materials and he has supplied for 150. So what happens? He need not to do the two transactions, 150 and 100. Simply they go with the difference amount to 50. That is nothing but our set of accounts. Got it? Now the very interesting point is opening balances and closing balances. And in your multiple choice questions also, sometimes we may come across this opening balance and closing balances, and they'll ask you the reasons for that. Okay, why? See, sales ledger control account, I said it is a customer's account or trade receivables account. Trade receivables account in nature it is an asset account. Okay, asset account always shows debit balance. Got it? So I am writing here balance brought down debit. Fine, no issues. Why a credit balance is also there? This control account is prepared. What is the reason for preparation of this control account? To check the any errors occurred in the ledger. Got it? Sometimes we may miss some transactions and sometimes we may write the numbers in some other order. So we need to find out, okay, whatever we received and whatever we paid and whatever we supplied, everything we should have the clear information. For that purpose, we are maintaining this sales ledger control account. Got the point? And do remember, for 7110, sales ledger control account is prepared, not a part of double entry accounting system. Whereas if anyone is watching this video, those who are studying for CPA and ICAI, they have the sales ledger control account as a double entry part. Okay, we are not preparing for the Cambridge International University O-level students. They are learning only for the purpose of controlling, locating errors, identifying any missing items. Got it? Okay, right. Last minute entries. If we have any last minute entries, instead of disturbing my ledger, main ledger books, I'll go with the credit items. Got the point? Because of that, the sales ledger control account shows a debit balance as well as a credit balance. Got it? Yes. Now here, interest charged on overdue accounts. Overdue means what? Customer did not pay. He's keep on postponing the payment. He says, okay, I'll pay next month and next month, like that. So we give some time for 2 months or 3 months. Normally 3 months, 90 days. Okay. If in any case, if they are not able, fail to pay, and you give a chance, some grace period, definitely we will charge interest on that. Okay, that interest whatever we charge, we have to write debit side, because interest we are receiving in terms of cash. Okay, right. The next one is closing balances. Please do remember, here we have to write carried down balance so that it comes here as brought down, and here carried down so that it comes as brought down. So this is a simple format. Only the thing what you have to learn is, we have to learn about the credit sales. Understand? If we have credit sales, we receive amount from our customers, that is cash and bank received from customers. If they are paying in within the time or before the promised time, we give some discount, that is discount allowed, it is expense for us. Okay, then if any unsatisfactory goods, they'll return to us, that is my sales returns. If any customer turn into back, okay, bad, that is my bad debts. See, I'm talking about only sales. Okay, sales took place. Okay, then we are receiving amount, or we are giving any discount, the discount allowed. If any unsatisfactory goods, that is sales returns, any person, any customer turn into bad debt. These are the main items in the account. Got it? Then next comes our cash and bank dishonored. If you receive any check, okay, if you receive any check and if they have insufficient funds, the checks are returned to us. So we write dishonored checks in the debit side. Because why we have to write debit side? So simple. We are writing credit side when you receive, when we are return, we are writing debit side. That's it. Okay, I'm not going into the main rules. I'm showing you how to learn the sales ledger control account in simple way and how to frame it. When you get the question, it is so easy to frame it and solve the problem. Now, any trade receivables, if we have refund, see, refund, the word is refund. Refund means what? We received and we are giving back. We received, then we are giving back, then only we use the word refunds. Understand? We must have received some excess amount here, okay, excess amount on the over the invoice. That amount may be returned to the receivables. That also we have to show in account. That is my refunds to the trade receivables. Then if a customer did not pay and they took some grace period, extra time, we charge interest on that, because that is a loss for us, isn't it? So we have to gain, that is opportunity cost. So what I'm doing, I'm charging interest. See, the funny thing is, if they pay within the period and if they are ready, to encourage the quick payments, we give discount allowed. Understand? Quick payments immediately after before the promised time. If they cross the promised time and all, we charge interest on them. Got it? So this is like a story you can remember. Then next one is set off. Understand? Set off, that is cancel each other. Cancel each other. When it takes place, it takes if a customer is a supplier. Okay, a customer is a supplier because we are selling goods to them. He may do some process and again he is selling to us. That means we are buying from the same person. So selling to same person and buying from the same person, then we go for the set off. The difference amount only we write. So this amount is transferred from purchase ledger. Understand? So how do you know? The supplier account is nothing but our purchase ledger or trade payables account. Got it? Now the thing is about the opening and closing balances. Sales ledger. Sales ledger, I told this is about our customers or in other trade receivables. Trade receivables account is the nature of asset account. All asset account shows debit balance. Understand? All asset account shows debit balance. So we write the debit balance. Got it? In fact, sometimes what happens? This is a control account, I told you. Last minute entries are there. If any last minute entries are there, I don't want to disturb my entire ledger book. I'll write the balance as credit side. Okay. Here I am checking only arithmetical accuracy of my control account. What I am doing, only checking arithmetical accuracy of my control accounts and my ledger books, as well as I have to check any items are missing. I have to locate errors. It is easy to locate errors. Then credit balance. Okay, credit side balance we write here. This will come as a brought down here to the credit side. Here debit balance we write it as the carried down and write in the brought down. Hope you understand each and every item. It is so easy. And one more point is you can add, we can find out the missing numbers. Okay, you can find out the missing numbers. Then if you remove, if you take off the opening balance of the credit side, it is more or less similar in the single entry part. So there also we have to find out, prepare the trade receivables account and find the missing numbers. Hope you understand, and thank you for watching my video. Please ask your doubts in my comment box. I will reply at the earliest. Thank you very much. Have a good time.